So, all right. That's that. Okay, so let's talk about 9:30, right? Um, I find it. All right, hi. Okay, all right, here we go. 9:30, right? So, if you're wondering today, right? I don't know what the hell is going on here. Day range. Yeah. All right, cool. Okay. All right. Let's kind of walk through this. All right. We got the first minute, right? Now, if you're trading 9:30 with me and you just understand how to trade 9:30, right? You can take the first move if we get a body close, right? Because typically we get about a 25 to 40 point move on NQ. But what you want to see is this type of situation here. You want to see basically us go up above, and then come down. When you get that right, you get a bigger move. And even if you don't get it here, you got your retracement back into the 930 box, right? Also known as the blender. And then you get a tag at the 50% level here and then drop down, right? Let's go to Tuesday. Uh, or was that Wednesday? What was that? Sorry, y'all. All right, Wednesday was a straight shot, right? We bounced. We came in here, came from below, and we came above, and then we just ran pretty much the whole day. Tuesday, right? What do you notice? This move is small. Get the momentum, boom. Bigger move, get the momentum, boom, boom. Right. Monday, we dropped down, right? Get the momentum, came back up, moved, right? Now at these 50% levels, at the top part of the zone or the 1 minute box, if you want to, whatever you want to call it, I call it the zone. And then at the bottom, right, when we get color changes and we lift back, we go back in the same direction. Those are good entries to take, right? But even these right here, you get a color change right at the bottom of the lip, right? Shorted, right? Color change, right? And if you measure the box, right, you can kind of determine what your risk factor is, right? Typically, what I'll do is at the if I get in at the bottom lip, if I'm taking short, my stop usually is about if it's this big of a they've been pretty big in the morning time, but if it's this big, I'll do like 50%, right? Or right, I may not get in until I get till we get to 50% mark, and then my stop is at the top, right? Same with on this situation here, right? My stop would be at the bottom. Stop at the bottom, right? And so you got a very limited risk, right? I think this one ran all the way up. So your risk to reward is amazing, right? And I showed this the other day, right? So even today, right? And I had a hard rejection, right? It was your first rejection. So you had one rejection here, right? You had another rejection here in which we took out the top, right? Then we came back Tried it again, right? Full rejection. Even had a rejection here, right? Same on the yes, right? Rejection, rejection, right? So so several ways. So this the major ways I play 930, right? Is that I wait for it to go to one side and come back down to the other side, right? Or I wait for it to go from the bottom, come back. Now you can try, right, and front run the move, right, and take shorts here, right, or take longs here, right. But I like kind of doing it here because by the time we get up to this side of the 930, usually you get a little bit more momentum. Because what can happen is, say for instance, you're trying to take this and you front run it. Like, yeah, it's not too bad of a amount of points, but it depends on if you have micros or minis. You need to make sure that you have your stop slightly up underneath. Because like you might have a situation right here, right, where you came, which if the box is big enough, cool. But if the box isn't big enough, sometimes you get stopped out playing like that. So I'd rather it come all the way down, tap this side, and then we go, right? And then use the stop, typically my stop would either be 50% or the other side of the box. All right. So we got that, right? Everybody good so far? Shit, I forgot let me damn drink. Hold on, y'all. Ooh, pretty good. All right. So, all right now. So the other thing that we got the blender, right? The blender is the 1 minute box on 930. All right, we're good there so far, right? So now let's talk about 1800. 1800 can be used the same way, right? Look at, I know Donnie is very familiar with 1800, and so a lot of future traders are, right? If you put 1800 on your chart, right, you'll notice one thing, right? If we 1800 and 930 are together, it's either going to compress price to the bottom or it's going to compress price to the top, right? Now, sometimes you can get, kind of lost in the shuffle, right? You get lost in the blender of both of them, right? And you just have to be careful, lower risk, and wait until it's out, spits you out. You take that direction. You want, you could throw in SMA, EMA. You could throw uh, a VWAP on there to help guide you, right? That those are helpful. As you can probably tell, SMAs, EMA, or moving averages, right? Your moving average probably did an H pattern here, right? And then we came on down and it probably kissed it at all these color changes here, right? So with your 1800, if you're playing futures at nighttime, right? So one of the things that I'm working on is so I call it the 5 minute zone, right? So basically, we basically what we're doing is we're looking at putting a 5 minute box around a certain time frame, right? It's typically is going to be either your 18 o'clock, your midnight, your 3 a.m., your 6 a.m., your 9 a.m., your 12 p.m., and your 1500 hours, right? And so what I am trying to do is basically when we have a 5 minute close over one side, right? Do we at least get a 0.10, which is about 20, what is about 20, what is that? about 20 points on NQ. 20 points on NQ is $40 per micro, $400 per minute, right? And so what I'm looking for is to see how often we do it, right? If we take the first one, right, which is it would be a close, either below or close above, and how often we get there on the first try, right? So what you have is you have certain time frames, right, that we have higher percentages. So your 9 o'clock is your highest percentage, right? Then you go to your 12 o'clock, your 3 p.m., and then you have your 1800. Midnight is the worst performing one, right? Which makes sense because typically midnight does has pretty much the smallest 5 minute zone. And so typically we run both sides a lot. Now, with that being said, say for instance, we fail and we don't do 0.1%, right? And then we go the opposite way. I want to know how successful we are if we fail this and we actually make it on the opposite side. So on this sheet, right, I asked for I'm looking at this. What is the success that we do either side? If we fail the first, if we make it the first side, or if we fail the first side and then make it on the other side, right? So you look at 1800 has a better hold on one second, y'all. All right, hello, sorry about that, y'all. So then you have things like 9 o'clock, which has a 95% chance. 12 o'clock has a 92% chance, right? And so to kind of give you an idea, what I'm looking at is here. Let me see if I got it open. Yeah, where is it at? All right. All right. So actually, I don't even need it. Yeah, I do here. So today, right? Today, if I look at what happened today, so you got the first one, 1800, right? We do. We got 48%, right? Which was 91 points. Midnight, right? You see how midnight failed the first one, right? Midnight typically fails the first one. And what happens? Were we successful the second time? Yes, right? So we basically lost 33 points, but we gained 66 there, right? So we made our money back plus more. And you got here, right? And so for it to be a failure, it has to close on the other side. So this one didn't close on the other side. So you got your 95 points there, right? This one, 23 points, we didn't close. So you either could have took this or you could have taken this, right? This was the 6 a.m., 9 a.m., right? 91 points, right? Then you got your 12 o'clock with 45 points. And then you got your 3 p.m., right? Here we go. 153 points, right? So that 5 minute like ORB on those time frames, powerful. And they have high percentages of either going either one way or the other at a pretty decent clip, right? And so here's typically the average move, and there's the average move if we go to the opposite side, right? But typically, if we fail, right, you see how the average move, if we fail the first one, is a lot bigger than that one, right? A lot bigger. I think this one, these two are smaller. This one's about even, a little bit bigger. This one's a lot bigger, right? And so then you'll be able to pick the day that you want. So Sundays will be okay, $1,800, right? It's over the last 3 months. I'm gonna see if I can add more data to this. And so you could pick the days that you want to look at, right, to see which one works on the first move, right? So 9 o'clock on a Monday works pretty much the first move after the first 5 minutes, as long as we get closed either above or below. Tuesday, which is what is the best day? Tuesday for just the first chance, first shot. Let's just say that you got 3 p.m. But then if you look at either on both sides, you got a higher percentage across the board from 9, 12, and 15, right? And then you have for Wednesday, you have looks like the first shot is best on at 9 a.m. But on Wednesday, 9 a.m., those three that you take losses on, right? You end up taking wins on them if you went the other side, right? And so this also is the range of that 5 minute, right? That's in percentages. So I do it in percentages because if price fluctuates, percentages stay the same regardless of how many points movement and percentage. And then here's the average drawdown typically, right? So you can also actually use this to kind of figure out how much drawdown you really want to have per trade, right? Instead of having it, I have a more lax the rules allow it to be, a success as long as we don't close on the opposite side uh once the one side is triggered, right? But you can look at this and see what side, how much drawdown you want to have. And let's go to Thursday, right? So Thursday, which was today, the 1800 had a 73% chance, right? No matter what direction, up or down. But then if we failed the first one, we had a 93% chance of either making on the first chance or the second chance. And so we made on the first chance, decent sized move today. And so as you look right, the midnight has a 21% chance of doing it the first time. So if you play this right, if you want to trade at midnight, I wouldn't take the first one. I would just wait and take the second one. Um, and then so on and so on, right? So as you look right, some of these are pretty high, but it's taking consideration if we fail the first one, the second one gives us a pretty good opportunity of making it. So then we go to Friday, right? So Friday will be tomorrow, the 9 a.m., right? The first move is about 77% chance. And for 12 o'clock, it's about 85%, right? On the first move. But if we don't make on the first move, right, it's about 100% on the second move. So that's what I'll be aiming for tomorrow, the 9 o'clock and the 12 o'clock. And that's just basically us looking at that 5 minute time frame, right? And uh the box, right? And then taking as soon as we close, you take the direction, right? Same with the 9 o'clock. As soon as we close, you take the direction. And if you don't feel, this might be new to some people, right? Because you need to trade futures to do this, or yeah, you need to trade futures to do this because at 9 o'clock you may not, you can't trade options. So, for the most part, so you'll be basically almost front running the move, and this is why this works because even if let's go back, right? So even if we get a failure to one side, right? You see how big that move is to the opposite side, right? And you could have closed it when we got to even when we tapped here and just jumped into the other side, and you made your money back. Even if you took this loss here, right? Knowing that we got 100% chance that we're gonna move, right? You made that back plus more. Everybody following? All right. So here's another one, right? Actually, I think this one might have made points quick. So you made 30 points really, really quick. So some of these are really, really quick. This one, really no drawdown here. This one, very rare drawdown, right? And so as soon as you like get past this first candle you close, right, you can put your stop here, right? And then you can just take profit whenever you want to take profit. It's typically that 9 o'clock one, right? As soon as we fall past that first candle, we drill down and we drill up, right? So here, right? Now this one would have stopped you out, right? If you had your stop, here. But even with that, you would have got yourself 22%, 44 points quickly, right? Here, right? Do we fail? Yeah, we fail, right? But as soon as let's see how many points you would have lost, right? You would have lost 26 points, you would have gained 39 here, right? You would have basically made your money back, right? Plus more. Boom, quick, right? So y'all know me. Like by the time I'm talking to y'all, I probably done already made my money times two, right? So, I gotta sometimes trade in silence to make my money here quick, right? But you had to, in some of these, right? If you make your money quick and it reverses and goes the opposite way, you can take the other way, right? A quick 30 points, right? Have your preset profit taken, right? When you start off at 10% and then, uh go from there, right? There go your point 10, right? This one, automatic fail, right? This failed, I believe. Yeah, it's failed. But then how many points do we lose? We lost 30 points, right? Or you can even say you lost here, right? 73 points here. We can make back 239, right? I'll take that. I'll take that loss even with a minute. Now my account may be a little different than y'all's, but still willing to, kind of risk that, right? Definitely if we fail the first one, right? It major money, right? So like people who trade Top Step, this is like an automatic, right? You made your day, right? Especially if you trade minis. Now, if you trade micros, you're gonna have to throw, I think, 3 or 4 micros on there to get you your $200, right? But definitely people who are waiting for, like, say for instance, you had a couple of days and you're waiting for that payout. Here's an automatic move for you, right? Get you done, get you your 200, get you, so you're not recklessly trading. This one here, right? We didn't close above, so it's still open. It's just ran for the day. Make sense? All right, let's go look at some tickers, right? Uh, um, all right. I always look at Mag 7. Oh, 8 o'clock, right? All right. Y'all know how the 8 o'clock works, right? 8:05 works. Sorry, 8:05 on Weeble. About your high and low, right? You take it in the direction we close above. So if we close above here, right? We close, take longs, right? You can even wait for a little pullback, but you remember the direction is going up, right? Now, sometimes if you wait for it, it can go without you. The idea is that you want to catch at least $1 move. That's considered a successful move, right? So if you see uh, this, and I'm updating all these as we speak, right? So this is my file that I'm updating so that it has everything current since whenever I started noticing it. So January of last year, right? So these will be all more current. So you'll see probably some of these percentages kind of go down a little bit. but typically, right, your highest ones definitely on Friday are going to be what Friday are going to be your Teslas, your Meta, your Microsoft, and your SPY. Those are pretty much 80%, right? High and low. Actually, let me get rid of these. High and low here. Looking for a dollar move at least, but most of them run at least $2 to $3, right? Boom. There are gonna be some times where you have situations, right, where you got your close here. If you get a close too far away, just be mindful that you are far. So you may want to, you may not take that, right? And let's see, did we get it here? Looks like we got it there, right? But here's a day that it ran, QQQ. This day it stayed in the box, so you wouldn't have actually closed below. So this would have been a losing trade, right? But you're okay with that because you trade the same percentage every day, right? Same lot size every day. So if you spend $300 or $400 per trade, that's what you want to do for something like this. When you play statistics, you want to always trade the same amount every time, same position size, right? So let's actually go to today, right? And let's see how everyone did. And we'll start from Apple, right? So Apple, oops. All right, you got your 805, right? We came, dropped down. Let's see, did we get a dollar move? 206. Money in the bank. Actually, we got a little more than that, but 333, right? AMD, right? Here's your 805. We get to move to the top side. Didn't get to move to the top side. We end up coming closing down, but we got to move to the downside, 97 to 93.82. So you would have made your money back plus more. Amazon, right? Jesus, let me take this off. Right? $4, right? Google, what did we do? Did we get? Nope. So Google was a fail, right? Which is fine. Meta, self-explanatory, right? 554 to 537, right? Even dropped a little more. So here, right, you get a close below, fail. This is 372, 377. That's your pass, right? So it doesn't matter. It's either way, right? So here goes your 805 here. Get close above 104.83 to 105, fail. But this was your pass here. QQQ, 805, right? Fail, right? Got your fail here. Fine. Then you would have a fail here, right? Because you close when they close on the opposite side, right? So you would have had 1, 2, 3 fails, right? And for me, that's fine because I know that percentages, if it says that it's 8%, that at some point today that we're going to make it, right? I'll take those 3 fails because I know typically that I'm going to get a decent move. So this would have covered all 3 of these fails plus more. Bye. First one's a fail. Passed. Boom. Tesla. Sorry, y'all. These are lines from previous days. Uh, all right. 272 to 276 passed, right? And you would have been done because I would have only taken the first one. So once we pass the first time, I don't take any more. Right? I'll leave it alone. So it's very easy, an easy system to kind of build your account up. Um, but yeah, so that's that. So yeah, I said let's go look at some tickers for. Let's see what we got. Kind of hard because everything kind of has fallen. So let's see what we got. Let's start with the heavy ones. Nothing there. I'm looking for key signatures that I trade, y'all. We'll go to and the signature that I kind of look to trade is something kind of similar to. I'm gonna do it on a daily chart so it's easier to see. So I look for basically a inside move. Right, I look for us to take out a low, right? Inside where we open and close inside the previous candle, then a gap up, and then I take those. Those are my signature trades when I'm trading. Or if you don't have it opens and closes, I look for a situation when we have like a doji, right? And then take those. This would be one I would take. Doji, gap down, boom. And I usually get about a week out on the contract. So I don't think that we're going to see anything tomorrow, but what you may see is okay. So Tesla is could be one, right? We've taken out a low. The only thing I don't like about this one is not that I don't like. Um, we've already kind of done it here, right? Boom, boom. And so what you, so we went up, retraces 0.5. So we'll see what we do there. But yeah, we could either go inside, can either come down. Usually, when you have an inside candle, you usually take out both sides of that candle. I'm actually in 280 call, or what am I in? 300 calls for next week, just FYI. So, but yeah, if we gap up, right, and we keep pushing, my level, I would, you can take out 284. Yeah, all are pretty much down. So it's not really, maybe look on a 1 hour, 2 hour. Yeah. Maybe Apple, maybe. Because if we move up, right, you got all these people who have to close their positions, right? And then you have all these people here that have to basically close their position who's short. Probably won't get some decent I already looked at that stuff. Some decent changes in candles on like until like maybe tomorrow, leading into next week or maybe Monday. So much stuff has dropped. Anybody got any tickers they want to look at? All right, let me see what else I can. Um, Everything is just so down. Oh, let's go look at this sectors. Jeez, XLU not bad. Even XLE drop. Yeah, we'll have to kind of play tomorrow by ear. We get big drops like this, and I've already made my money. I typically don't even trade because of the fact that like it's in no man's land, right? So it's almost like trading at all time highs. Sometimes, even though we are back in the range, but trading all time highs are kind of like I don't really trade them. Um, I'm more of a range trader, right? So, but we've had such an extensive drop from right here to right here. It's like we just look at this part right here, and we'll look at XLE. Okay. All right. If we just look at this, it don't look like we've ranged. If you look at this, right, we've ranged. All right, we're great. Yeah. So what I was saying about, I looked at NQ. So let me look at SPY. I think I did do. Oh, I did. Never mind. All right. So here, right, starting with the 3 month, right, we're underneath the previous quarter. So I'm looking for shorts. At the same time, I do expect some type of relief a little bit because we've dropped down quite the amount. But so if I fib from August 2024 to all-time highs, right? If we continue dropping, my little area of interest, right, would be here. Just so y'all can have it on the side. This area would be my area of interest, right? Unless we bounce from here, which is possible. So then let me go out a little bit further to so now you see we're at the 6.18, right? So just in case we do get a move from here, because if you notice, right, what happened here? We got a reaction at the 0.5 level, right? And we came back down. So until we kind of closed above it, but I'll leave that there. And then my next one would be August or October, right? And where are we at? 0.382. So I'll mark this as uh, and we could potentially fall all the way. So my next moves would be now for us to get all the way down there, that means that we would have to take out basically this quarter. We have to take out, we already took out this one, we have to take out this quarter, and this would be basically we take out July of 2024. This would match up to here. And then you got April of 2024. So sorry. So those would be my levels. And if we want to look at it like from a percentage standpoint, where are we from all-time highs? We're only at 12.6%. 15% will put us here. So I would say we probably split that. Oh, we'll probably go to 15%. But yeah, actually, this would be better going to about 16.5, 6 to 17% at some point, which is about 5,100 on the US 500. So if you ask me tomorrow about what I'm looking at for us to do some type of push up, right? We got this gap between us. So if we push up and we start to take out all these people here, because these are basically like, lack of better terms, not really single prints, but let's see. This is how you can tell if we're gonna go back into it. Is if did we balance out 50% of the candle, right? Or did we balance out this 50%? Yep. Move it on down. Did we balance this 50% of this candle? Yep. All right. Did we balance this 50%? Right. Yep. Did we balance this 50%? Nope. So for me, if we go up, this automatically is a place, right? And then if we go up to this candle, right? Did we balance this one? Nope. And then we don't always automatically balance it, but at some point we do balance it, right? We got to offer it to both sides. So those would be my places: 5,400, 5,400 basically, and then 5,446 is if we decide to push up a little further. You see, right? We don't offer it 50% here yet, or this one, right? What we do, we go back and offer it, right? Now, let's see. Do we offer 50% on this one? Nope. No, we didn't. At some point, I expect us to come back up here. Of course, you know how the stock market is. We're meant to go up, so everything up above, I do expect. Like here, right? We didn't offer 50% all the way until here. Boom. And guess what you got? Big pop. That basically popped us all the way up. So all these people we didn't offer it to came and got it. All right. Any questions so far?
Hey RS, how you doing? This is Winter here.
What's going on with it? What's going on, bro?
Hey buddy. Just to be clear, when you say 50%, it's basically a 50% retracement of the previous candle by the current candle.
Yeah, yeah. So I mean, so it doesn't always have to be the current candle that does it, right? So like for instance here, we didn't offer it here on this current on the next candle, but at some point we do have to go offer at least 50% of it and to balance out that candle. It doesn't
Okay.
have to hit the whole part of the candle, just 50%. So if you look at like a lot of times, definitely if you look at like a 1 minute, right? You'll see a 1 minute does it all the time. But your bigger candles takes a little bit more time.
Okay. So it does it on all time frames essentially.
Yeah, yeah, essentially, right? So um
Because it's basically a price inefficiency that price needs to come back to and do work there.
exactly. And so some people call them fair value gaps. Sometimes they are fair value gaps, but it's not really I don't really go by I don't really use all those terms. But it's just like if at some point a candle moves, right? A candle moves up or down, right?
Uh-huh.
They have to at some point come back and offer it 50%. They have to come back into discount or come back into premium to offer it to both sides.
Okay, that makes sense. Cool. Nice. Thank you for this, EDU. This is awesome.
So like when you're in a trade, right, and you'll notice it, like um when we're trending for real, like right, even here, this is a trade, right? We're it's a trend to the downside. You'll notice that like at that 50% level, if we're gonna trend in that same direction, at, I would always have my orders sitting there, right? If you want to be safe, and then you just get hit, and then you take it continue down in the same direction, right? Because now you've gotten it at a discount versus you trying to trade the breakout, right?
I get it. Okay. I've seen that, but I've never actually put a number to it just like you did. And now that you lined that, I see it clear as day, man. That's awesome, bro.
Yeah. Like definitely if you're in like a decent trend, like sometimes it doesn't go back to it in that, you know what I mean? And that's you just miss out, right? Or you just chase, which is fine, either or, right? You just manage your risk. But the best thing to do is like when you're trading, and if we have a decent trend, is to put your order at about 50% of that of the previous candle, and let it get tagged in there, and then
Okay.
yeah. And
Sweet.
sometimes candles will do it on their own, right? So you have a candle like this, right, where it retraced 50% anyway, so you can just take it on back up if we're trending back up. But then you have here, right, 50% here, right, and then you could, if definitely you manage your risk right, you could have your stop underneath. As long as it don't close below underneath the candle, you're good, and you continue in that direction.
Right. You can take that little bit of drawdown, but you still entered
Exactly.
in a decent value zone.
Exactly. Exactly, right? So it's like if I'm going to take drawdown, right? I'd rather take drawdown at 50% of the candle or a little bit under whatever, right? 50%, 60%, whatever, right? On the so that if my loss is, let me take this off. So say if you have 100% here, right? Make it realistic. Assume this is 100%, right? If I'm shorting this, right? I want to short up here versus down here. This will be the premium price of shorting, right?
Yep.
Because if this comes back up, if I'm going to put a stop somewhere, I say if I have a if I trust the trade, right? If you trust the trade, your stop should be up here, like you know what I mean, because this should be safe if you're shorting.
Yeah, in the safe zone, out of reach price, and if it does go there, then it's invalidated the thesis, right?
Ex- Exactly. That means you're just fucking wrong, and that's okay. Nothing wrong with that. But if I'm going to
Yeah.
do something like that, I'd rather get it at discount, right? And then take this versus getting it here. Sorry.
Oh hell yeah! That's I mean it's short to pop, but with a good defined value zone defined off each candle. And it actually helps me stay in a trade too, because sometimes I'll get shook out when it makes that 50% or more retracement. Because I
Yep.
don't I'm not fully understanding the this principle, I guess, and it shakes me out of my trade sometimes, and it pisses me off.
Yeah. So and because like you'll notice it, right? You'll notice it like on higher time frames a lot more than smaller time frames. But they do it. It's all fractal, right? So you'll notice it once you'll see like a candle will go up into the other candle at least 50% and then come back down. And you're just like shit. And you may be taking it here or if you're shorting instead of getting it here. And now your drawdown makes you a little bit more nervous, right?
Yep.
Instead of getting it here, your drawdown is not as nervous, you're more comfortable, and then boom, right? Because if it's going to go in your direction, right? If you're wrong, you're wrong. Right, you're right. You know what I mean? It is what it is. But
Yep. It
you
is what
know,
it is.
so I think people just have to
Dude,
understand that when they're trading, right? Like it's okay to be wrong, manage your risk, but when you're right, be right, right? And you're right. Those you want those ones that you're right on to be your big winners, right? And you want your wrongs to be smaller wrongs, so you manage your risk accordingly. So that's why I do like the 930, and that's why I do like certain things about like certain time frames because I can manage my risk by getting in at 50% levels versus, like I can take it down here, but do you see it dropped here, right? And I'll show you something even crazier is this.
so that's your box on your 930 open on your 5 minute candle.
It's on a 1 minute, right? So it's
1 minute,
on
one
I
minute.
do it on a 1 minute. Yeah.
That's the first candle of the day on a 1 minute, and then you
Yep.
mark out that zone, just
Yep.
like
Because that's
just
on.
like the 805 candle. But
Yeah.
do
So
you
it's kind of like your 5K to a certain degree, right? But the
right?
930, right? This is where basically everybody in the market can now enter the market, right? Options at all levels can enter it. Futures, all levels are there. You know, uh, all stock tickers are there. Everybody's in the market, so you're going to get the most. This is basically that 930 is your mean. It's like the mean of the day. That's the average of the day, right?
Right.
And so typically, what you notice in non-trending days, we hang out at this 930 a lot, right? And we go back to it, we come back. And what happened is if we are trending down, but we're still ranging, right? You'll see us do this, come back, this, right?
Uh-huh.
Same thing.
Yeah.
This
Yep, yep.
way, back, this way, go back, right?
Right.
And so it's like it's almost like the average of the day, right? The average price for the day. So if you know that if we're going, we're more leaning more bearish, right? And we get underneath it, you getting your, you starting up right here is perfect
100%.
because now you're at the mean, and of course, if we're short for the day, it's not going to really go above here.
And it's a great point of risk too, right? Because you can set your
Exactly.
stop loss right above there, and it's less drawdown. Yeah, I love that. I saw that
Exactly.
perfectly today too.
Yeah, so if we're going to be bullish, right, that 9:30 is going to be basically our low for the session, pretty much, right? Or even if it's not, what you'll see is it'll do this instead of doing this, right? If we're bullish, it's going to do this, right? It's going
Right.
to set that low of the day, right? 9:30, 10 o'clock, and then you're going to see us go back up.
Sweet. All right. I got that's awesome. Thank you. That helps a ton, RS.
Yeah, no problem. And so yeah, and if you notice, right, all right, we made the high, right? Couldn't get past it here. We fell down, right? And then now these are safe up here, so you can just, like I said earlier, or I don't think you were on earlier, but you can even whatever. Some people use moving averages, some people use VWAP, anything of that nature. You can throw that on here, and you can see how, right? So I think I have one here. So here, right, you can see how. Let me get rid of some of this stuff. All right. So now you got your 20 moving average, right? It don't matter what moving average you use. Like if it's short, it's short, right? So you see how we get underneath? Once we're underneath 930, you just use whatever moving average, right? And we get to it, short it, right? Now don't get me wrong, it's the mean, right? So sometimes we come back to it, but as soon as we come back down underneath both of them, you short, right? And so you can either use that, you can use the anchor VWAPs that you can use, right? Soon as we're underneath all of these, right? Underneath 930, underneath your MA, underneath your, your anchor VWAP or VWAP, whatever, short, right? So I would just short pops, right? And if you look at from on the other side, here, right? So this was Wednesday, right? You just long. You wait till we get above both, right? Say if you couldn't catch this, you just wait till we do this, right? Same with, what was it, Tuesday? Yeah, Tuesday, right? So we came underneath, right? And then we came back up. Once we got above, you just look to long as we stay above both of them, right? And it don't matter
Oh,
what MA or EMA you use, it all works the same.
on this particular trade, RS, would you have longed right after it got off the box right there, or would you have
Yeah,
wait for it to
so I have kind of data behind some of this, right? So I know that like, all right, so this is what I look for in the 930, right? I know that the first or the second pop, right? I know I'm guaranteed at least 20 points on him in NQ, right? Now, with that being said, if you can't catch the first ones, the best thing to do is wait for it to do something like go from the bottom and go to the top, right? Or go from the top down to the bottom. Now, the most safe trade is to have your short here and catch the impulse. Have your long here and catch the impulse. You could front run it if you want, but you have to be careful because sometimes we can do like we did today, right? We can, if you front ran this one to short it, you would have got blown out of water, right? So that's why I like to wait until it crosses over both the 50, the top. Say if I'm shorting, I wanted to cross over the top of the box and the 50% and touch the bottom and then take that because now I know it has enough velocity to kind of push down.
okay, so 50% through the box, you got higher conviction once it breaks 50% of the box.
So it's more so when I know it, like, so for, say if we're coming from above, right? I have more conviction if it actually crosses both. It has to cross all three of these. And my
I got
order, my short would be here.
okay. It's supportive. It's supportive until it does so.
Exactly. Because if you see here, if you try to short here, you got, yeah, shit, you're in trouble.
Oh
Right.
yeah, you ripped.
Yeah. And so instead of shorting here, if you get a color change here, right? You get a boom, red to green, right? If we're longing, take it up, right? Same thing
Yeah,
here, color change, boom,
yeah. And he even
right?
gave a
I think
double bottom like a retest. That was really perfect.
it, exactly. So even here, right? We pushed above, right? At that 50% level, it didn't break it, right? You got a color change here, red to green, right? So that's why for me, I wanted to break across, right? Because even here, you get a color change here. But if you would have front ran this long here, even though, yeah, you're front running for basically to get 30 points, but you're risky. Like, but the issue is that it may not have enough momentum to reach all the way through. So why not just do that?
Right. Oh, it gave so many opportunities.
Exactly. So, and to be honest with you, even if you didn't catch this one, right? If you caught this one and your stop is here, man, you made enough for the day, right? I mean, you
Yeah,
could have
that's
ran
all
this
you
all
need.
the way through. And so a perfect example was today, right? Was was it today? Here, right? This is why I like for it to come from one side to the other, right? Because here, boom, it came down. But look, it tried to go above here, right? If you would have fret ran that, yeah, you would have had a potential of 88 points, right?
Right.
Potential if you front ran it. You would have gotten 45, which is cool. Nothing wrong with that. But that's 278.
Yeah, way different. And you have to be quick to take your profit. That would be just a scalp. Yeah, versus
Exactly. That's just scalp, which is fine. If you want to scalp it, that's cool, right? As nothing is wrong with that. But you have to understand here, I'm looking for scalps, right?
right.
Here, I'm looking for it to, either continue, definitely if it doesn't get above the 50%, I'm looking for continuation. Now, if it goes across, now I'm looking for reversals.
Right. But rejection of that 50% in the box, like and made a lower high in the day. It was pretty clear. It was puts.
Exactly. So even if you drew a fib here from the top of this to here, you got your fib levels here that are telling you that we're not, we're dead, right? So like, the like I said, we're already bearish. The news is already not in our favor. We're underneath so many different things, right? We're underneath Sundays, key Sunday level. We're underneath the key Tuesday level. We're underneath the March NFP still. We haven't had our NFP for April yet. I mean,
Yeah.
unless we got above here and stayed above here, because if we were going to be long on the green, we would have stayed above here, this right here.
Yeah. Yeah. 100%. Right. We with that much momentum down to the engulfing candle that we experienced last night, like that's just it's momentum and power, right? It's because of ripple, like in a bearish ripple, right?
And so once like, so say if you look at it from this standpoint, if we're not above 9:30 by 10 o'clock, 10:30, unless
Uh-huh.
they're going to be a reversal, right? Then we're short. Same with the other side. If we're not below 9:30 by this time frame, right? We're going to
It's
be long.
short.
Yeah, or yeah, it's short. If we're not above it by this time frame, we're short. If
Right.
we're not below it by this time frame, typically longs are the ones to move. Now, don't get me wrong. You may have a day where we do something like this, right? Go way up and then come way down. It happens, but those are more news type of situations,
Yep.
or just big reversals.
Sweet. Well, I'm drawing my box tomorrow, man. I'll tell you what.
Yeah, and I think, oh shit, I made delete all that. I think tomorrow is a pretty decent day for 9:30. Let me see. Yeah, tomorrow's pretty good for 9:30 tomorrow on Fridays. So what you want to do, like, so I will say this when you're for Fridays, right? What you want to be mindful of is making sure it doesn't wick, right? So I would wait, I will let the first one play out, right? Unless we get a body. If we get a body above or a body below, you're pretty good with taking it that direction for at least 20 points. But if we get a wick, typically if we get a wick, it's going to wick it and then go to the opposite side. But I'll be on live tomorrow, so I'll be able to kind of walk through the 9:30 and walk through like a few other things. So
Sweet. I look forward to
yeah,
that. So
yeah,
when you say wick, like if there's just a wick inside the box, then you won't take it. But if it's a solid body,
yeah. So what happens is, so I kind of like, I'm not gonna lie to you. I will front run it, right? And I'm gonna show you a few different things. So if I but here's a perfect example, right? You see how we wicked we wicked below here, right?
yeah, yeah,
So when I know that if I see a wick, right, on whether we go up or down, I get out the trade, right? I want a body because if I got a body, I know for sure we're gonna at least get a decent move.
okay, a body
So
through
it's
the box of the 930 box.
exactly. So
Okay,
for instance, on a situation like this, right? I think what was this Wednesday? Yeah. So I went short, right? And as soon as we end up closing above here, I just took the loss and I went long, right?
right.
And so, yeah, I lost 26 points, but I gained that quickly, right? Within 2 minutes.
Awesome.
So you
So
like
you,
if you take the first one, you have to be quick. So that's why I tell some people it's better to kind of let it do what it's going to do the first couple times, and then take
right.
the other ones, right? And just kind of just let basically what you want to do is you want it to let it gain momentum, right? Like this one, it hit it immediately, right? But what you want to do is you want it to kind of build some steam and then go.
Okay, yeah, I see that. I mean, that one came way back in before it went.
Yeah. But then sometimes you have situations right here, right? This one took off and I missed this one, right? I couldn't catch this one, but it went 154 points, right? But then this one here, I got my body closed. I got my money. I got my money's worth here. Where's another 930 at? All right, here. So you got your 930 here, right? So you can either front run it, right? And just know that if we wick it, get out the trade and just wait till we do something different, right? So here, you got your body, right? You got a quick 30 on 37, 40 points, right? So here you see how it has this wick here. I will get if it wicks, I'll get out the trade because I know my data says a wick doesn't is less probability of us going the move that I'm expecting. I want a body, right? So if you
Right,
notice, body we go, right? Body we go. Wick
right,
first, it's kind of like it's iffy for me.
right. So it wicked up, it pushed up, but then it had solid bodies down through, signifying bearish.
Exactly. So like here, right? Even though like so here, like we end up getting a point, 20 points, but it struggled, right? I'm not looking for a struggle. I'm looking for it to impulse and get me out, right? So
Yeah.
here, 10 points, it did it on the first candle, right? So you'll know because if it starts struggling, you don't really want that.
Right. Yeah. Once it starts struggling, you can kind of see it in price action. It fails, and then that nice
Exactly.
double top, double top. Yeah.
Exactly. So like when you see it, it's instant to give you your 20 points on NQ, right? And like so if you're trading micros or minis, you know what I mean, depending on what you're trading, it depends on what you get, right? So here, what is it, 930? Where's that at? All right, so here's a perfect example. Uh all right, so this first one, right? You would have got your points, your 20 points quick, right? Body.
Yeah.
You notice how that's 70 points? Body,
Yeah. See that.
you know. So
I
you see
saw
what
it
I'm saying?
as
Even
soon
though
as
this
you
was
open.
body. Yeah, so
Yeah.
sometimes that first one isn't always the best one to take. So I'll let that first one go, right? You know what I mean? Unless we
Right.
get a strong body on the first one, then I can feel comfortable about us continuing up. But I'd rather see it do something like this, right? Boom, right? Now I've got a little bit of momentum to come to the downside, but then here, right? So now the momentum went back to the upside, right? And you get a far bigger move.
So did you take that upside trade that day after it reversed and came back and tested the top of the box on your trend line there?
Talking about this one here.
Yeah. Yeah.
Oh, so yeah, so I'm trying to think what day was this? This was Thursday of last week. I took this one and I was done, to be honest with you.
Okay. It makes sense. You probably made tons of money. That's awesome.
Yeah, like I was done after this one. Just cause like for me, the 930 is more so about like I want to be done with one or two trades and be done with this strategy. I don't want to be trying to trade this strategy all day. Because what can
I got
happen is you'll have some days where it doesn't happen often, but it will go through the 930 like 20 times. And I don't like those.
yeah.
So I try to take advantage of the days that gives me 50 to 70 points quickly and I don't have to struggle with it.
Okay, sweet. So it's like out of the gate a lot of times on this strategy.
Yeah, it's out. Yeah. So all right. So here's a good example here. So here's your 930 here, right? You see how many times it went through both sides, right? Until it picked something. I don't really like
Yeah.
days like this. Although, right, if you look at it, did you get your 10 point? No, you didn't get 10 points. So here you would have got stopped out several times, right? Before you actually got your 10 points on something. So fine, did we get 10 points there? Did we get 10 points here? No. So days like this, which was a Tuesday, 10 points here. Nope. It took a while to wind up. And then but once it went, right?
Yeah.
So you can measure like when you have that when you make your box, right? You can measure this and kind of figure out what your risk management wants to be, right? Or what you can do is, okay, let me throw a micro on there. But if it gets going right, now I can throw minis on here on pullbacks and pump my day
Yeah.
up.
Okay. So
So
that's
like
the
so say for
trend.
instance,
Go ahead.
this is 84 it's 84 points, right? Just if you say you had your order, you're 84 points potentially. Well, that's what 170, almost $170 with one micro, right? But what if at all these pullbacks you got a mini, right? And you took it for 10 points. Now, right? Because you never your stop is still here on your micro, right? So if your stop is here on your micro and it never gets touched, you just hit mini for 10 points on the pullbacks, right? And now you've taken $160, $170 trade, potentially 200, 200. You see what I'm saying? Does that make sense?
Yeah, absolutely.
So that's how you can build your day, right?
Right.
And you can do that on any one of these. Like on a day that we're trending, it's a lot easier, right? Because you can see the pullbacks, right? So if you had a day like this where okay, you took a micro here, right? And you just okay, I'm gonna just let it run and let me stop out on the micro, but on the mini, I'm gonna take pullbacks for 10 points. Shit, with Trump in office, each one of these damn candles is 10 points. Right? You gotta look, it's 20 points actually, really. So
I love it. Volatility is awesome.
yeah. So like that's how you kind of have to like as you guys are building your accounts, it's like throw a micro in there, let that be your, what one of the one trader that I learned from was let that be the queen, right? And then, if you're in the right direction, shit, you send your knights out there and you let them go get your extra, go get the extra food, right?
What? I love that. That's great. I love that.
And so, and you let them protect her. So, right. So, say if she even goes up and she pulls back, right? That if it comes back down and you lost on a micro, that's fine. That's not gonna hurt you, right? That's 70, $80, right? But think that's 4 points on a mic on a mini, right? So that's nothing in this, you know what I mean? So you just wait for pullbacks to whatever your way of determining a pullback is, and you take that mini and you get your 10 points and you move, right?
I love it. That's your in out. That's right. That makes total
And
sense.
and that will help definitely people who trade futures stay in a trade longer, right? And still get a decent amount on the day. Because I think a lot of people, what happens is a lot of people trade futures and they want to trade minis because minis brings the money, right? But you got to build your account to get there, right? You got to build your account so that you don't feel that the whiplash that minis can do to your account, right? And you don't over leverage. So do a micro. If the move is the move, right? You're gonna make your $150, $100, $200, whatever you make off that micro, but you stay in the trade longer because you don't feel the jitterness, the anxiousness of a mini, right? And then, but you can still use that mini to beef your account up, but you just got to use it with number one, a tight stop, and number two, only on pullbacks in the direction of the trend.
It's like hedging in the same direction.
Exactly, exactly. Like so for today, right? And usually I trade minis, but today I was trading micros, right? And I'll show you what I was doing. I basically did the same. I did exactly what I was telling y'all or telling you, right? So here, right, I was taking micros here, and every time we dropped, I would take a mini and I would leave my stop like right above here and just catch two, 300, $400 until we actually started going, and then I left my mini on there.
Huh. Oh, so it gives yeah, I love it. Something to buy and sell in the middle of the chop. You're just making money on all the little moves, on
It,
the little
it,
Fibonacci.
exactly, exactly. And you don't have to like I said, and you want to do it on pullbacks, right? So if you have a trend line here, right, and okay, this is my trend line. All right, boom, catch it, put a 2 or 3, what I mean, stop, right? 2 or 3 point, 4 point stop, whatever the stop needs to be. You have your mini already here, right? You probably already made, okay, so that's 40, so that's $100 almost, right? So a 5 point stop, you know, it, that's just that's the expense of doing business, right? But if you're using it with your other stuff like trend line, as soon as it hit it, you made with a mini, you made shit. If you held that, you made $1,000. Now you could obviously have your preset profit taken on, right? And you could have taken, what it was 100, 200, whatever you have your profit. I would tell people, 5 to 10 points because it's fast and it's easy, and then you don't have to worry about it. But say if you're somebody who's not scared to, if you're okay with using minis, right? But you want to, reduce your risk, you could have caught $1,000 right here in 4 minutes.
Wow, awesome.
And with
But it's better to not be greedy. Like you said it as something that's more probable to be hit.
Yeah, so like 10 points,
Yeah.
that's like I said, each one of these candles are damn near 10 to 25 points, right? So that's why you only want to get in on pullbacks with your mini, right? Because you want to get it in discount and you want to have a tight stop, right? And then let it go, right? I wouldn't say that, but I'll say, you want to have as tight a stop as you can, let it catch and boom, right? Let it catch, boom, let it catch, boom, right? And you kind of you almost want to have your orders already preset there. So when it hits it, hits it and then boom, right? So that's going to require you to, maybe draw fibs, maybe figure out what's, your trend lines and stuff like that, um, so that you kind of, you kind of know where to put your orders at. But yeah, I mean, so like definitely in markets like this, man, throw a micro in there, and I mean, I promise you, you can make your money. I promise you. I know people who make thousands of dollars a day trading one or two micros, especially in this market. But all right, I'm gonna go ahead and finish it and let the class end. I appreciate everybody. If y'all have any questions, just message me. Appreciate everybody who attended. Hopefully this was helpful. Tomorrow I'll be on. I don't really have too many meetings tomorrow, so uh, I'll do 9:30. I, um, and so what I'll be looking for, if I alert anything, I'll be looking for us to do something like this, like I said, or something like that. Or if I see us in some type of, minor trend, right? Taking stuff off of either the bottom or top, looking for color changes that basically, these three levels, 50% on the bottom. So appreciate everybody.
Have a good day. Thanks, RS.
All right,
Appreciate you, buddy. Have a good day.
no problem. Thank you. Whatever. Thank you everybody for attending.